Hello, everyone, and I hope you're doing well. So, coming out with an update here on SPY. Very basically what we expected after the drop. So, we just kind of have been getting this sideways action, and on the left, you'll have the present, and on the right, it's the pattern that I've been tracking. So, this is I want to just kind of go over like how we've been trailing or tracking this bounce, right? So we got the bottom here, and then we expected this, complete run up and then a retrace to check it, and then break above that. And I think that it was represented in this here, this small section here. This is why fractals or sequencing or like whenever you want to do things like this is what's so difficult about them, because this was very short, so was this, but relatively speaking, this point in time took longer than this point in time, and this point in time was also a larger move than here. And it's ironic because this entire move from the very beginning is much larger, so you would expect this movement to be replicated on a larger scale, and that causes a lot of overthinking and all that stuff. However, from my experience, it really just comes down to structure more so than scale. If that makes sense. It's tough to explain, but again, this is also a subjective reading of this material. So it's kind of like looking at the Bible and digesting different meanings from it. I'm showing you a pattern. We can all agree that it looks pretty similar, but people are going to say that one part is this part, and blah, 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 and that, blah, blah, blah. And that's what makes the market such a individualistic and beautiful thing, is that everyone has their own strategies and opinions, and some work, some don't. Some win big, some lose big. And so it's a ginormous spectrum, but I've been looking at this pattern for a very long time, waiting for this moment, and I would like to say that, my opinion, I guess, has mean something, especially if I've made a good amount of money off of it. And so I'm just going to do my best, and, you take it with a grain of salt or however you see it, but I hope that, we can both agree on what we're seeing here so that we can both prepare. So moving on, sorry. So we have this retrace right here, and then we have this run up, and right here, right, I think is analogous to this part. And so I took a trade here, and then I played the next day because we were expecting it to go higher, make a higher high, right? And then you see that we got, let's see, the thinking here. So this was a really confusing point for me. I played the higher high trade here and took profit, right? And then I didn't expect this breakdown. So what was I thinking here? So I kind of played I looked at this structure, which was just confirmation that we were going to head higher. Now this candle did scare me because that might have been the algorithmic check of that, and then it could have made its second wave down, which worried me, but it was during pre-market, so I just kind of had to hold on. And right here was confirmation for me, so I held and then took profit up here. And I'm thinking that this section right here was actually this dig down, right? Because this section does go above, right, this current markdown. And then this big retracement, I actually bought calls. I don't know why. I'm on the 5-minute though. So that would, let me see. So I remember I saw this and I bought calls here because I didn't think it would dig down this much. Bought 527 calls and I was down a lot at pre-market, obviously. But it made the higher high. And the reason for that, and I was confident in holding it, is because there was a higher high marked here. Now this is the tricky part, and this is basically the full point of the video, to be honest, is trying to figure out what this section all means. And I have a couple of theories. So do you see these two lines here, horizontal? Now, this is kind of how I do my land marking. And of course, it's structure based, right? So you'll see here that in this bounce, it ended up marking just above the higher high of this leg over here on the left. When it first retraced and then swung back up for that arrow top structure. So right now on SPY, right, I think that this part is analogous to this part here, right? And so if we just mark these points, right, without even looking at what is going on right now, the idea is that when it marks above this point, it's going to make its way down for the next leg, right? And we have that. We're above that. The only scary thing about this, and which is why I am a little concerned, is that this came up pretty high to the initial markdown, like where the curve started. And the curve started here where this 539 gap is. But at the same time, which is very interesting, this is going to get a little deep. When this drop first occurred, it formed a gap, right? When the actual selling off started. So I'm going to mark this 1 minute gap here, right? And then we're going to see what happened when it made the leg down. So I'm going to mark this with red. So then the theory here is, did it fill this gap before marking down? Before making its second mark down, right? So let's look. And it did not, which means that if we want to apply this to the present, it wouldn't come up to fill this gap. But at the same time, the reason why I say it's scary is because this is an S-curve. This is a bullish S-curve, right? Right here, it has the same thing, the same microstructure as an S-curve. And all that we would expect here is a markup like that, right? Now, do you want to know what's really interesting about this? Is what happened on the present when SPY made its leg down, when it started, right? Well, right here, it was an S-curve that broke. So I'm going to do, let's see, do something like this. So you can see, I mean, I'm sure you can probably already see it, right? So when this whole thing started, it was because an S-curve up failed. So this was supposed to do, I think this was supposed to do some like, it's a really botched S curve, honestly. Right, so that's what it was supposed to do, but then it broke down out of it. Here we have the same thing setting up, kinda. You know? And it can break down here and then and then start its next leg down. And then we do have a lot of like news propaganda. I don't know if it's propaganda. I don't know really at this point, but on Monday is when, really big move happened, and I wouldn't be surprised if they do that again, because who is crazy enough to hold a position over the weekend in this market? Well, I am, because I can see this stuff and I believe it's going to happen. And what we would like to see is just down. Like if we just get down tomorrow any percent, it would confirm that for me at least, it would confirm that the next leg down is starting. And what's crazy about this leg down is that it's the larger move, but it's also the hardest move, because it's not just straight down like it was before. All right, this is more convoluted. And so what we do know from this, however, is that it's going to mark below the low of the pattern, right? So the low here was broken, as you can see, right? Because the low here when it started was 396.72, or no, wait, 396.74, and the low here in the past was 396.70. So cents below that initial point, and then it marked back up, right? And do you see what happened here? That red line that marked the initial gap when this broke down? Well, that got filled, and then as soon as it got filled, it came back down. So what I'm thinking here is, this is going to be crazy. Two scenarios here. If this is an S-curve up and it fills this gap, I would be led to assume that this whole structure is one thing in itself, which would be absolutely insane. I don't think that's the case. I really don't think that's the case, because that would mean that we're coming down like this, and then we're coming up like this, right? I don't think that's going to happen. I think what's supposed to happen here is simply this. I think this is what is in store for us, honestly. So if that gap gets filled, a lot of alarms would go off, and I wouldn't be confident anymore really in the direction, because scaling this pattern this large when you have two sequences within them, it's too complicated. So I really wouldn't know what to say besides landmarking it and saying that it would come down below 404 if a crash were to really happen here. And I don't think that's the case. I think it'll come down. Maybe because it's a larger, it might fill the 486 gaps. And then it would just kind of mark its way back up, and then it would just never ending pump because of AI, I guess, could be the thing. I think at this point, I'm gonna be honest with you, after it hits 491, 492-ish or whatever, I will go calls. I'm gonna go calls, because even if that's the case, like, it comes down, Like it would probably come up and then it would want to form that arrow top again. You know, before actually wanting to make that big of a move down. But it's very, very possible. These two scenarios. You have a crash scenario, which would bring it below the 404, right? Or you have a correction scenario where we just go below 492 and then mark our way back up to all-time highs. And this gap here, this daily gap at the very tippy top, that's also telling. That shows to me that there is some want here, there is some uncertainty here, and the algorithm very may well be satisfied with what's going on down here, considering that this whole area was checked off so much. These gaps can be argued as unnecessary or not important because this level was checked repeatedly. So if SPY just wants to come down and check these levels off, you know, the 486, the 479 gap should definitely be filled, but am I really going to hold for that? Could it really happen? I mean, sure, considering that this is the larger, I believe. This is the larger of the drops. So the initial drop here in the past, from the beginning to the end, was 1.69% down. From the beginning to the end here was 2.46, so double, right? Now, if we wanted to apply that logic here, well, actually, do we want to go from this point? Because the drop really did start here. 1.99. What if we let's just assume it happened right here. Right, 6% down. That's crazy. So if we get 6% down, we're looking at 12% down? That's too low. That's too low. I don't think that would happen. No, I plan on getting out below 492. A really small part of me wants to hold for 486. It's painful. It's painful, the temptation, because that would basically triple my value of my put position. And in case anyone is wondering, I have 490 put contracts expiring this coming Friday for 500 strike. So I believe that it will go below 500 before this Friday, and I have 490 contracts. And I will not be telling you my average cost, but I am down right now. So that is the thing. So I would like to see an immediate down, you know, and the reason why this is really tricky for me, let's assume that the sequence marking above that top here, let's say that wasn't even in the cards, and let's just look at structure alone, right? This whole structure was a Fed event, right? So volatility was high here. I've never tracked a Fed event algorithm to the present before. So this is my first time doing it, and the fact that I'm being so aggressive with my positioning is really arrogant of me, but at the same time, I don't care. Like, I don't care. I don't want to miss this play, and I do believe that giving myself till Friday to profit from it in the slightest is good enough. So on Friday pre-market, I saw this structure here, right? Considering the fact that we had the whole retracement. So this whole retracement, right, was completed, and you see here how the high wasn't broken and then it dug down. This is really confusing. I'm sorry. I'm trying to figure out how to show this. Right? So you see here the high. Look at this. It's almost picture perfect. Right? I'm going to delete all my drawings and I'm just going to put the line here. So we have this high right here. And then it's analogous to, in my opinion, this high right here. And look what happened. The algorithm, it did a small retrace, which is, you know, if you were trading it that day, it's not small, right? Like there's money to be made here. And when it did that, it then marked above that once, came down. So it marked above that once, came down. It's supposed to do that again. It did that again, right? Now here's the thing though. You see this structure, how when it came up above again, it dug down pretty far. That's what I thought this was here. So I thought that this right here, actually let me just try and do this easier. You see this, right? This pattern right here. I thought that was here, right? And that we were gonna get one high and then break down. And for some reason, I guess I didn't think about that. But we have a bunch of sideways nonsense going on after this fact, staying below that high, keeping in mind that this high is above that high point from the first pullback when it started, right? And now we're going sideways, and now we should be making our way down. And what's going to be really scary is that as it comes down here, it's going to be curling up. So a lot of people are going to expect this to come up because this is going to be a wedge formation. This is a wedge formation right here, kind of, you know. It's like a wedge formation. So people are going to be expecting this breakout, but it's going to fake people out. And then this huge move is going to get a lot of people. Right? And so then the next morning when people wake up, it's going to be high and then it's going to come down again. And so the question is, what does the algorithm want to do? Does it want this to happen during the news? Because we have producer price index and we have consumer inflation, CPI, right? So these are very big catalysts. Plus we have the war. So this is going to look pretty scary already, and if we want to track this, if we want to landmark this, right? So when this starts to break down again, it would go below. It would go just below, because people would think it would be a double bottom, right? So it would come all the way down to 507, and then it would bounce. It would bounce up, and I bet you, because we have producer price index on Tuesday, so if we get this tomorrow, or I mean we get this Monday, it would make sense to go sideways here after the bounce, and then producer price index comes out, and then we make another wave down because it's so bad, right? And then it comes down, then maybe it bounces again, right? Goes sideways, and they're like, oh, no way, inflation, CPI is gonna save this. And then boom, and then CPI is what seals the freaking deal. And then we go down, and then it's fucking money, baby. It's money. It's money. And then after that day, then we get the oh no, you know what? Actually, now that I think about it, right? Because we have this huge bounce before the low here is cleared. So actually, come down, we bounce off the double bottom. We get a retrace, we come here, right? And then where is the bottom of this pattern? It's 493. So 493, I would almost say, is guaranteed to get filled. Guaranteed, not financial advice, though. Guaranteed, right? And then maybe we come down from PPI. What the fuck is going on? All right, here. And then we come down here. on PPI, but we don't fill it just yet. We don't fill it just yet, because let's see what happens. Like, it's gonna be an instant reaction almost. I'd be surprised if it wasn't an instant reaction. PPI brings us down, right? And then maybe we get a little bounce here, and then CPI comes out, and then maybe we mark down below 490, and then at the open, that's where I would want to get out. I'd want to get out at the open on this day. I'm hoping if PPI event brings us down below 493, I would very much doubt it, considering where is this bounce going to come from though? Because the bounce happens before it goes up. So I don't even do the same thing. So would it be PPI that does it? Maybe it's in pre-market and it comes up. Because it looks like it goes above this low here. So it breaks down, it bounces, and then it breaks down below it pretty far, which could be from PPI, right? And then it bounces up above it, like this, almost right to the beginning. And then it goes sideways a little bit, and then comes down and marks below it. So I would actually take profit here, and then wait for the bounce, and then re-enter. But the question is it just gonna bounce in pre-market, or is CPI data gonna be so good that it pushes it up? You know, like it does something like this. Or no, this would be CPI. And CPI pushes it up. And then does it all happen in pre-market? That's the thing, that's what I want to know. Oh, that would be tough. This is because you see how this moves right here? You see how this moves? This is slow. But this is no joke of a movement right here. And one thing that I want to avoid with this is I don't want to experience what happened all the way back here, because I traded this day right here. This was CPI. It dropped 3% off of CPI, and then it rallied 4% on the open, right? What is this day? 10/13. 10/13/2022. Let's go there. 10/13/2022. Where the you see this? This might happen. And if this does happen like this, then that would be good, because then you'd still get an exit. People would be like, wait a minute, it's fine. And then you'll get a 1% 1 minute candle. Oh my god. Oh my god. Because it could do this. It could come down like this, and pre-market it's up crazy amount, and then CPI comes out and it absolutely destroys it, right? Which is kind of what we expect here, where it would do this, and then after CPI it would come down like here, right? And then it would do some crazy shit. And then that's where we would get our reversal, our market-wide reversal. The thing is, we also have NVIDIA earnings on the 26th. 26th, that's far away. Very, very far away. So, do we want to do this, come down, and just kind of play chop zone or whatever? And then we want to wait for NVIDIA earnings, and then NVIDIA earnings will be the market reversal. That would be crazy opportunity. Crazy opportunity. So, yeah, sorry for being so loud, but that is kind of what I'm looking at right now. It all comes down to Monday. We need an instant drop in pre-market, and we need it to come down. Maybe I would like to see at least 1%, and then PPI data brings us down to 507, and then once we go below this point, we'll come back up in pre-market for PPI, or I mean for CPI. Come up in pre-market, and then data drops from CPI, and we come down, and then it is absolutely exit every put position you could possibly have, and then wait. Just wait. And my friends, if this happens, I'm retiring. I swear to God, I'm fucking retiring. So that is what is on the plate. And like, these gaps down here are just annoying. I just don't, what's gonna happen here? So many questions, but considering everything is followed up until this point, 493.76 is guaranteed, in my opinion. Not financial advice. So that is the play that I'm working with, and that's all that this video is about. So yeah, I wish you luck. I hope that you can make a profit on this, and I will be showing my profit if I do come into profit. And if I lose everything, man, then I'll show it. I'll just show it. I did withdraw some money from the money that I made off of this drop, so if worse things come, you know, then I will just start from the beginning, and I'll never give up until I get what I want. So that's the thing. And you know, it would suck if I did not make the money that I expect here, but I'm really confident. I'm really confident. So that's it. So I wish you guys the best of luck, and until next time, peace.